But if you put the money in a Roth IRA, you pay the taxes up front and the money grows and grows and grows. And if you know anything about compound interest, the amount of money that you're going to amass in an IRA, if you're doing it early and often, is going to be pretty big.
Welcome to the Real Estate Mogul MD podcast. Thanks for tuning in and taking control of your financial future. This is a show where we not only motivate and inspire, we give you actionable real-world experience to help you live life by design. You'll hear journeys and stories from other physicians, investors, coaches, consultants, and entrepreneurs. And now, here's your host, Brett Riggins. If you're a physician with a family, plans to have a family, thinking about having a family, and whether you're investing in the stock market, thinking about investing in the stock market, or investing in real estate, thinking about investing in real estate, we're going to put these things together today. If you're a physician, you're a family, and you're looking to invest now or in the near future, you're going to love this conversation. Today, I've had a wonderful, wonderful connection with is actually a financial advisor. He's a certified financial planner, and man, just a great conversation. He's actually with a group called Physician Family Financial Advisors, and you can find them on the internet, but just give us a listen today. Please welcome to the show, Nate Reineke. All right, well, welcome to the show, Nate. How is it going today, man?
It's going good. Going good.
First of all, where are you talking to us from? Where are you located at?
I'm in Beaverton, Oregon, which is Portland metro area. It's the good part of Portland.
And we are recording this in the month of December. What's the weather like?
Oh, I was kind of down on the weather for a while, but I just made a trip to Spokane, Washington, and it was much worse there. So now I'm counting my blessings.
Perspective, right?
Yeah. Exactly.
And are you a football fan at all?
Not much of one.
Okay.
I got a couple digs in with the Ducks recently to all my football friends, but
yeah,
no.
Oregon and Washington, the old battle there. That was interesting this year. I love college football, but just how that rivalry just kind of played out this year, and the quality of the teams, absolutely love it. We actually have a couple clients out in that area too. So learning a little bit about the Pacific Northwest.
Nice.
The rainy season, and now moving into the cold. It's cold, right?
Yeah, it is cold. And I feel like you shouldn't talk too much about the Northwest because it's a best kept secret.
Oh yeah. Yeah. Beauty. I can't wait to get out there. Actually, I have not been there yet. I'm excited to get out there and see that. But hey, man, let's get into this. Tell us a little bit about this. So we're on a show. I love this. I love prefacing the conversation with this. When I don't have a physician on the show, I'm not a physician, and you're not a physician.
I'm not.
So who is Nate, and what do you do?
Yeah. So simply put, I'm a financial planner. So financial advisor, financial planner, investment guy. There's a lot of different names for us in the industry. But I work at a firm called Physician Family Financial Advisors. And we help doctors with children turn sort of their worries about taxes and investing, and we turn that into all the money they need for college and retirement through the financial planning process. So financial planner, in short.
And the interesting piece of that, two things, physician and family, and it's right there in the name. So it's very interesting. Your clientele is going to be not only in the medical practice arena, but have a family and with kids.
Yes. That is actually very important to us. Clients that really get a lot out of what we do tend to have children, tend to be practicing physicians for several years, because most physicians don't have the time to have kids too early. We have some of those, but mid-career physicians with a few kids, very, very busy people, and they worry about money a lot. So worry about sending their kids to college, how to prepare for that, how to prepare for retirement. There's a lot of differing opinions online about what these physicians should do with their fabulous incomes, and we try to make sense of all that and kind of block out the noise for all the other stuff.
And how did you get into, not being a physician yourself, how did you get into this business, working with physicians and specifically physicians with families?
Yeah. Well, I have an interesting story. And then at the end, I can kind of tell you about why physicians specifically. But I grew up with a financial advisor as a dad. So my dad was a financial advisor for as long as I could remember, talked investments, looking at charts in middle school, like
Hmm.
the works with my dad. So I knew I wanted to be a financial advisor really early on, sort of for two reasons. One, I have been, still am, will always be very, very passionate about personal finance. I mean, like starting with the basics. Like I was writing budgets in a coloring book, you know.
Wow.
So, I love personal finance. I love investing, but I actually would say that the bigger picture of it all and how to handle your finances with your family is what really is important to me. And everyone here at the firm sort of has a different specialty, much like physicians. And my specialty in the beginning was just helping physicians get out of debt because I was a big, get out of debt person. It was kind of suffocating me and my spouse's life when we first got married. And back to the football real quick, by the way. The reason I actually didn't watch much football is because we cut cable when we first got married to get out of debt. We were like
Yeah.
bunny ears TV and when bunny ears weren't a thing.
Yeah.
So I was really interested in that, but the kind of the behind the scenes of that, I saw my dad who worked for a company, but it felt like he ran his own business. And I'm very, very interested in operating a business and, just leading a company. But I'm also at my core, I'm not an enormous risk taker. I'm in finance, it's a pretty secure career. Big on getting out of debt and all that. So I was like, how do I not take all this risk, but still get the juice of running a business? And so I saw my dad doing that. And so I really wanted to get into the industry. Went to school at University of Oregon for economics, all with a plan to become a financial advisor. Started working at a bank when I was about 20 in school, working at a bank. As soon as I got out, I got a job at a bigger bank. Actually, my dad got me a job at a bigger bank at his bank. And so I was in that world for a while, and I would get in the room as often as I could with the financial advisor when I was just a banker. And to be honest, when I sort of showed up, it wasn't exactly what I was expecting. We weren't talking about getting out of debt. We were like upselling credit cards.
Mm-hmm.
And we weren't talking about, low cost, low turnover index funds. They were selling proprietary, investments, AKA high fees. And you were just there as a salesperson. You're there to make money. And it was a long climb before I could act like my dad, who sold whatever he wants. And he sort of, I guess he just did what he wanted because he'd been there for a long time and they just sort of let him do what he liked. But I saw it as a decade before I could ever do that. So I actually left, getting married, wanting to have a family. I didn't see that as a great place to work. So I went to this big Fortune 500 company, completely out of the industry. It was pretty sad for me. I really wanted to be in personal finance. And then what I found was the only people you could really help were rich old people. And I just didn't find any value or meaning in that because the middle class can't really afford a financial advisor, to be honest. So I went to a completely different industry, but still super interested. So I kept the pulse sort of on the industry, and I found the firm I'm at now, Physician Family, and I saw on their website that they were a subscription-based model. And I wondered how the heck that works, because that's super different than most of the industry whose charges AUM, assets under management, and high fees and all that. And so I reached out to the owner of the firm, Ben, and I just said, hey, I want to get in your circle. I don't know how I'm gonna help, what I'm gonna do. And I just started writing for the website. Not the best writer, but I was very interested in the topic. And I wrote an article about how to get out of debt. And he just thought it was really interesting. And a couple of years later, when everybody was trying to get public service loan forgiveness, it was new. It was 2017 was the first year anybody could even get it. And it was about 2018 when people started kind of asking about it, at least to Ben. So he said, hey, I need someone to come in and just figure this out and just take it from the ground up. So I did, and then got all my licenses, certified financial planner license and all that. Got really interested in helping people save for college. There was already sort of the typical investments, helping people get invested in mutual funds and index funds, that was already taken care of. So I sort of did everything else. I forced my way into budget conversations, even though doctors don't like the budget. I just took it from there. And I feel like it's pretty unique what we offer is just that a full service financial planning firm. And with that subscription based model, it allows me to talk about what I think is super important, which is viewing money the right way and how, at least the way I think it should be viewed, which is just a resource that helps you live the best life possible, which is usually dominated, at least for our clients, by spending a lot of time being the best doctor you can be and spending time with your family.
Lots of stuff there.
Yeah.
Some of the stuff that stuck out to me was the subscription-based versus the AUM, the assets under management. Can you briefly describe what that means?
Yeah, sure. So typically, just the standard agreement between most people, not just physicians, but most people and their financial advisor, is you are charged based on how much assets you have with them. So if you imagine, you have your 401k and everything you have at work, on top of that, in order to retire, you got to save more than that. Like that's table stakes especially for physicians. So you have your IRAs, and then for a lot of physicians after that, it's just the taxable account. And you have to go to a financial advisor, usually, unless you want to do it yourself. And a lot of people kind of get lost in what exactly to do or how to do it. You go to an advisor and you say, hey, I need you to do my backdoor Roth IRA and my taxable account. And that advisor does the investing for you. Usually through the process of financial planning, they tell you how much to invest. But they have a conflict of interest because they want you to invest as much as possible in their accounts because their income from you is completely dependent on how much is in those accounts. So a lot of bad advice comes from that because there's a conflict of interest. And if you think about the typical physician, at least imagine a young physician with inflation and everything, they probably have to amass $8 to $10 million to retire and spend, the average amount of money. Now that sounds like a lot of money. Today that might be $3 or $4 million, but 30 years from now, it's going to be a lot. And the average advisor charges 1% of all the money that you have with them. So
annually?
Annually.
Okay.
So in the most kind of egregious cases, we have clients who have $10 million with us. So you're paying that advisor $100,000 a year. And if you're in the right investments, it shouldn't be all that hard. I mean, if you're in index funds and basically you're just rebalancing the accounts and making sure you do your Roth every year and kind of the basics, it should not cost that much money. So the way that these doctors kind of get roped into it is when they first start with these advisors, they're poor. They have no money. They're in a bunch of debt. Their advisors don't want to talk about the debt because it doesn't help their bottom line. And when they come in, they say, charge you 1%, and 1% on nothing is a great deal. But pretty quickly, within a few years, most physicians have $1 million net worth. A few years after that, with compound interest, it's a few $1 million. And so, to be honest, we used to be sort of one of the firms that just did AUM. And over time, the owner of the firm just felt like we were just part of the problem, sort of robbing physician of just obscene fees. And so we completely switched over, and our fee is certainly high to the average person, but for a physician who pays anywhere from $10,000 to $100,000 a year to this typical advisor, it's sort of a deal. So they just pay us a monthly flat fee directly out of their checking account. And if you can imagine how most of the time how this goes, I mean, I got clients who, when they're switching over to us, they don't even know how to log in and get a statement. So they don't know how much they're paying. And it's all hidden through investments and through their investments. So they might get a 8% return, and when they see their statement, it just looks like they got a 7% return. But really, the advisor took 1%. So out of just wanting to build trust with people and be really trustworthy and proud of what we're doing, we charge fees directly out of your checking account. Everyone sees it every month, and it's posted, our rates are posted directly on our website. And for the typical company, I think that sounds pretty normal. for financial advising industry, it is far from normal.
I like that. It makes it increases the transparency, so you
Yes.
can just see the
Yep.
fees directly out of the checking account every week,
Yep.
so you don't have to log in. Because some of those some of the sites are man, they're just daunting. And
Uh,
I'm not the most tech savvy in the person in the world, but I feel like I've got a pretty good finger on the dial. And
yep.
if I look at like Wells Fargo and like the complexities that are in there, I was like, because this is this asset I can see over here, but then I can see over here, then it's combined over here, and it's like, what in the world is all of this stuff? It's crazy.
You know what I learned in banking too. Sometimes that's the case. Like it's like too much information. You can't even get down to the nuts and bolts of what you're
Yeah.
investing in or what the fees are. But I learned in banking, sometimes it's the opposite. Sometimes it's because they aren't tech savvy, and that's because when it comes to the finance world, you don't really want to be an early mover
Hmm.
when you have $1 trillion in your you know, in your
Right.
Edwards Jones or whatever, however much they manage across the nation. Like they're not looking to upgrade technology until it is bulletproof. And
Hmm.
so it's actually hard because a lot of times you go in there and it doesn't make sense compared to how good technology is now. They're like in the dinosaur ages with their technology, and it makes it just more difficult to just navigate. So
Yeah.
yeah, it is confusing. And the other day we opened up an HSA at Fidelity.
Mhm.
And me, certified financial planner, I couldn't for the life of me figure out how to take the money out or put
Mhm.
the money in. I'm like on tech support.
Yeah.
Like, what's going on here? This is crazy.
Yeah.
So it's hard.
You mentioned backdoor Roth. Tell us a little bit about that. What is that?
Yeah. So um, in financial planning, or I guess in the strategy for your retirement, most people understand that IRAs are available to them, which is a traditional IRA is you put the money in, you avoid the taxes when you put the money in, and then the money grows in your investments. When you pull the money out, you pay taxes. And the idea is simply just to get a tax break. But if you put the money in a Roth IRA, you pay the taxes up front, and the money grows and grows and grows. And if you know anything about compound interest, um, you want the amount of money that you're going to amass in an IRA if you're doing it early and often is going to be pretty big. So all that growth is going to get taxed really bad in an IRA, like pretty heavily. But if you do a Roth IRA, you pay the taxes up front, the money grows, you take the money out tax free. And sometimes there's a debate on which one you should use. If you're kind of a middle class family, should I do IRA or Roth IRA? Most people know it's a Roth. You should do a Roth. But with physicians, they make too much money to get the deduction on an IRA. So there is a workaround that has been blessed by the IRS. So it's not some weird strategy. A lot of people use it. But you put the money in an IRA, even though you don't get the deduction because you make too much money. And that because you make too much money to directly contribute to a Roth IRA, you convert it from your traditional to your Roth. So originally, you were sort of kind of boxed out of using a Roth IRA, and with this sort of workaround, physicians are still able to get money in there. It was potentially going to go away with the Secure Act, but it ended up staying. So they didn't close the loophole yet.
Interesting. Yeah, and it just everything that we could talk about with regards to the IRS in the current tax strategy could always change next year, especially
Right.
an election year. But so to
Hmm.
me, I'm hearing you create a standard and then basically you convert it, you roll it over to a Roth.
Yeah.
And then I'm imagining you pay the taxes at that point, or you pay a fee to roll it over to the IRS or something.
Yeah, there's no fee. It's just some paperwork, and normally that would be the case. Like if I make less than the limit, which is low $200,000 a year as a family, and I contribute to an IRA, I get a tax break. If later I wanted to convert it to a Roth, then I would have to go back and pay those taxes that I saved. But with most physicians, they make far more than low 200s as a family. And so they don't get the tax break up front. They already paid the taxes on the money. And so you just convert it with some paperwork with your brokerage company.
Hmm.
So we do,
You've
hundreds of
already
those
paid the
every year.
taxes. Yeah, then you're just
Yeah.
rolling it over.
You
So
just
there's
roll it
no
over. It's
difference.
just it's a weird workaround, but totally legal and,
Yep.
lots of people do it.
Yeah, we're actually, I'm considering rolling a Roth into a Roth 401k. Does that make sense?
Yeah.
Yeah.
It does make sense.
So
Yeah.
then we could work with leveraged funds, as opposed and not incur the UBIT tax, unrelated business tax,
Mm,
something UBIT. I think UBTI. That's what it is. Anyway,
UBTI.
there's this thing in there that happens if you're invested, um, and again, this is more of an accounting,
Hmm.
CPA question,
Yeah.
but there's so many different avenues and so many different strategies to go down. Real estate being one of them, and I just wanted to talk a little bit about that.
Hmm.
I make sure I didn't miss anything about the things that you talked about. I think that's good. So before we had this discussion, we actually met before a few weeks ago, and we talked about, um, not a recorded thing, and you just wanted to make sure that you would align with the guests that we have on the show.
Right.
And I assured you, it's like, yeah, we want all perspectives. And
Hmm.
this show, and for our listeners, I always want to make sure that we are giving a transparent perspective on
Hmm.
all directions, right? On all venues, whether you do invest in real estate or you don't. And since our conversation, it's actually even led me into some further thought on the topic of financial advisors versus real estate, because
Right.
usually they're two different things.
Yeah.
And I think we may have talked a little bit about it too, Nate. I'd read a book let's see, it's called From High Income to High Net Worth. It's Dr. David Phelps, DDS,
Hmm.
and he mentions the difference in the markets,
Hmm.
where it's the stock exchange versus real estate, and just the efficiency of information that's put out and your ability to judge or assess the market. And it's
Hmm.
inefficient markets and efficient markets.
Hmm.
And that's usually what creates this wall between the two. And when we talked, you were talking, kind of like, hey, is this something, because we don't typically um, recommend our clients to do real estate, right?
Hmm. Yeah. So I want to be real. So thank you for just putting it all out there in the open. So I want to be really clear. There's certainly money to be made in real estate.
Hmm.
There's no question. I mean, I told you my dad was a financial advisor, or is a financial advisor. I mean, I was surrounded around people who were trying to make money in a variety of ways. I was surrounded around people who tried real estate and went bankrupt, and I was surrounded around people, one in particular, who spent his life in real estate, and he had a government job making 100 grand a year, and now he's worth probably $20 million in real estate. So I think real estate can be an extraordinarily effective way to build wealth. I think specifically for physicians, I have not seen it work out as well as maybe the average person. And obviously, this has to do with my own experience. I'm working only with physicians. I'm not talking to a ton of real estate investors all the time. And I'm sure there is many success stories and just as many failures for a variety of reasons. But you're right. Real estate is much more inefficient. And you can find a bargain in real estate. So I think that's important to note. But for the people that I work with, it seems to me that real estate is sort of a distraction. And so the reason that I think that is I think that the dream of real estate is a lot of times sold to people who literally don't make enough money to ever retire with a reasonable amount of assets. Like they have to leverage themselves to ever become multimillionaires, or they have to live well below their means. And when you're making an average income, that's very difficult to do.
Hmm.
So when I'm talking to physicians, mainly I'm talking to physicians with families. So these are people that they might be working 80 hours a week and they got 2 kids at home. And they ask me if they should be investing in real estate. A lot of times, because they've heard it all over, so I can't just jump down their throat and tell them no. I ask them why. Why do you want to invest in real
I
estate?
love that question.
Yeah. So just what's the purpose of this? And they'll say things like, which they have been sort of, they don't really understand why they want these things. But we get down to that. So they say passive income, and out of one side of their mouth. On the other side of their mouth, they say they pay too much in taxes because of their income. So it's sort of like, why do you need more income? And that sounds like a ridiculous question. Of course, we all want more income, right? But I'm talking to people who make $700,000 a year, and they can't figure out a place to put all their money. That's why they called me. They literally have hundreds of thousands of dollars in cash. And the answer is always, well, of course, why wouldn't I want more income? But the root of what I'm trying to get to is, what would you actually do? Like, what difference in your life would it make to have more income at this time? Or what difference in your life would it make for retirement if you bought real estate? And at the end of the day, a lot of them can't really, well, it's a paradigm shift for them because they've been told so many times that they should buy real estate. But at the end of the day, they don't have a good place or good reason to buy any asset that produces income. And so they'll talk a lot about taxes. They want to save on taxes. And I was actually really curious about this. I wanted to talk to you about it. My take on the taxes with real estate is, for physicians specifically, there's no, I can't think of a way for them to become the real estate professional, 750 hours into their real estate transactions, to actually get the real benefit of those taxes, which could go against their W-2 income. They could write off their real estate income, but if they have any, if they are good at finding a deal. But do you have people that you work with that are successfully doing that?
Yeah, and this is a great question, and I think about it all the time. I'm on the other end of the spectrum. I am actually a full-blown real estate professional,
Right.
in the way that this is all I do. I eat,
Yep.
sleep, live, like this is it. This is it. So it's easy for me to qualify for that. So inside of that, this is more of a CPA discussion. Inside of that, there are certain parameters that have to be met in order to trigger that. And you mentioned one, the 750 hours. So even with the 750 hours, I know a lot of physicians marry physicians, but when they don't, a lot of times that other person could even qualify as the real estate professional. So beyond that 750 hours, there are other additional items that kind of waterfall down from there, whether it's 50% of your time, 50%, more than 50% of your time or income. I can't remember. We'd have to dig into it. So there are ways that could be met in a partnership. Whether husband, wife and husband kind of parameter.
That makes sense to me.
And then inside of there are also ways to step down the hours required as well too. I don't know all of them, but all the way down, there's one that's currently available through the short-term rental world, and that would reduce your hours down to, I believe, 100 hours a year.
Oh,
so
interesting.
That's a massive decrease, and you have to be materially involved activities. And again, there's lots of parameters that have to be met on this, but it's possible. Again, if you put this together, and it's difficult, but it's possible to have somebody align in the 100 hours. But if you had a partnership, a husband and wife partnership, then that creates more opportunity. The other direction I always talk about too, Nate, is I think about this in buckets. And ultimately, I'm trading time for money as a physician, and I don't have the time to go out and have a hobby or get job in real estate or whatever it is. But I am investing passively in real estate. This does require time. There's no such thing as passive income. Nobody's going to care more about your money than you do.
Agreed.
So we don't want to fluff anything up. It's going to take time. But I've created these buckets, active and passive. And in my journey in the next 5-10 years, if I'm transferring more of my income generation to that passive bucket, then all of a sudden this tax world does take a whole new grip on me. Because think about it. If I'm making $200,000, $300,000, $400,000 in my active bucket, and then I'm putting stuff into my passive, and I'm creating this passive income from there, I'm also leveraging cost segregation and all these different strategies to implement where I'm using this passive loss to offset that. But the more as this strategy goes along, the more I can shift my actual income generation into the passive world. So
Hmm.
there is a point where I'm only making passive income, and therefore all of that
Right.
appreciation, all of those benefits come into play.
Right. That is certainly a path. Yeah, that makes sense to me. It's funny because the times where I have said, you know what, maybe this would be right for you is always when there's one person who's really interested in real estate. Because I think there has to be
Yep.
an interest. It can't just be FOMO.
Yep.
Like it
And
just
both
can't.
both people have to be at the table. If it's a husband
Yeah.
and wife, both people have to be at the table. They both, because when they're not, like we had one instance where we were working with someone and it was husband and wife, and one of them had some family history of real estate. And it was a constant battle all the time with that particular person based off the conditioning that happened in their life
Hmm.
of being a landlord and the troubles and the risk and all of that. So it was just constant challenge. But yeah,
Right.
and it's not made for everybody. You're right.
Yeah.
And it's finding really that point of the why. It's
Yeah.
got to tie along with the why. I love that you asked that question.
Yeah.
And really then it's your resources too.
Yeah.
Because, if you and I were in the same room and we're working on something, you may have a little more resources than at your fingertips and empirical evidence or formulas to say, okay, this may work for you in this regard. So it's all
Hmm.
about the team around you, the people around you, and that has to align with the why. So the resources, first the why, but then the resources. How are you going to do this?
Right, right. And so if you or in my kind of walk, my journey through working with physicians, um, some of them have their why, it does align with real estate. And so again, I don't think that's a bad thing. But the people that we are focused on helping, it usually doesn't because they don't want a second job. And
Hmm.
and that really, like you said, that is what this is. It's time consuming. A lot, our favorite people to work with are ones who want to be doctors.
Hmm.
And I know that I actually feel terrible for most physicians because we're kind of um, with this field in general. There's so much burnout, and there are so many people that are looking to get out of working in medicine that I could understand wanting passive income and to sort of escape that world. But there are a lot of physicians that love being doctors and they want to be doctors, but they want to do the right thing with their money. And they're just wondering if physician is the right, or I'm sorry, they're wondering if real estate is the right thing. And for those people, I would say you can certainly opt out of this opportunity. There are many, many opportunities. Real estate is one of them.
Hmm.
And for those people, if they're looking for good reasons to opt out, real estate can be expensive. You pretty much, in my eyes, to do it right, you should be an expert and you should be good at finding a deal. Um, it's a liquid many times. And I don't believe that they have to use leverage. And, from an economics background, certified financial planning, leverage isn't always, in the real estate world, it's used as a good thing. It's it's a swear word in my world,
Hmm.
right? And to me, it represents risk. And I know from experience, seeing people become fabulously wealthy using leverage, that it is possible. But when I work specifically with physicians, I'm thinking you don't have to. You
Hmm.
don't have to use it. So why would you, you know, insert yourself into this risky endeavor if you don't have to? Now, there are also ways to invest in real estate that you can use professionals and it not be yourself. And I think that that's a decent way to do it. You can buy REITs or you can work with somebody like you, who knows what the hell they're doing.
Hmm.
But for me, and looking at physicians, they have spent all their time and energy on becoming doctors. And it seems to me, just by my experience with people, that I have yet to have someone come to me that has become rich off of real estate as a physician. And that's probably because those people don't call me.
Yeah.
the rich ones.
Yeah.
But I have seen time and time and time again, hundreds of physicians become totally financially independent off of just investing in very low cost, low turnover, um, easy to manage index funds.
Mhm.
And to me, I've also never seen anybody go bankrupt buying index funds, right? So um, it is very fun to talk about real estate. I mean, I'm even interested, I have been in the past interested in real estate myself because I'm not in the tax bracket that my clients are in.
Mhm.
But at the end of the day, uh, there's a lot of risks that people sort of aren't privy to with real estate that I think is a shame because most of the time when let's say like bloggers are talking about real estate, there's some conflict of interest tied to it. Either they want you to invest in their syndicate or they get a kickback if you buy real estate through a certain person, and they're not really being told the whole story when it comes to real estate. So that in a nutshell is the investment reason, but the even better reason, because I've just admitted you can certainly make money off of real estate, and there's a lot to be made. But the bigger reason for me is that it is a distraction from your practice in your family, unless you have a really, really solid plan to stop working in medicine and spending more time with your family later on. And as a dad of young children, I would, it's hard for me to recommend people give up the early years with their children because if they're working 80 hours a week and even just putting an extra 20 into their real estate or 10, there's just no time for those kids. And those little toes are only little for so long,
Yeah. Yeah.
you know? So that's where I stand.
Yeah.
What do you have any thoughts about that?
Oh, it's awesome. I mean, I love it. I mean, I could go into hours and hours on each one of
Hmm.
those topics, but those are the times too that I sit back and I sit in my hands. And that's something I'm learning too, Nate, because I'm not here to persuade or
Hmm.
to carry anybody or unsolicit.
Yeah.
If I try like so much, like you mentioned, like the bloggers and having uh kind of this additional motives or, like these other things tied to it when that's sales, marketing, whatever it may
Yeah.
be. I'm thinking that my path is leading more towards sharing this information and sharing. Obviously, capitalism creates the ability to for socialism, if that makes any sense to you at all. The capitalism piece, the creation of that capital creates the resources necessary to give intentionally,
Hmm.
right? So that's a personal opinion of mine. But
Hmm.
in that path, yes, there are ways that money is being made, but in that same path, there are ways that we are offering these things back to people. My
Hmm.
path, similar to your path, I'm sure there are things that you do that you're helping people and you're not expecting anything in return.
Hmm.
So don't get too far down the lane of the everybody's like that, right?
Hmm.
There are people out there who are there to help others,
Hmm.
even though there may be things fueling their ability to do that. Because, like for me, there's those uh, pieces of my life that allow me to do what I choose to do, to be with my family, to do the things
Yes.
that I want to. That's that capitalist piece, right? And that's enabled me now to get to a point where I can give back and give to others. But
Hmm.
there's so much, and it's all about comes back down to your why. And asking yourself that even 7 times. I think you do that great job of that. I'm only assuming this. I've never sat with you and a client at the time, but to hear you talk, um, asking why and why and why. Tell me
Hmm.
more about that and getting down to what that means to you. And it says it perfectly in your company's name, Physician Family, because that to me also drives into the why of where you want to go, where you're going to be, where you at. There's no simple answer here. There's no
No.
yes, you should, no, you shouldn't,
Right.
or not right now, maybe this time. But at the same time, there is one answer that we all should have is keeping an open mind.
Sure.
And it makes me think of this book right here. I'm pounding through. You should read it every year, I believe. It's called Think and Grow Rich. Have you read
Hmm.
that, Nate?
I have not.
Come
I
on
have
with
not.
it. Go get
Okay.
it. Amazon. I'm not making anything from it. Go get
Nice.
it. Amazon. I listen to it on Audible. I listen to it and read it at the same time. But This is 1937. This text was written in
Oh, wow.
1937, and millions and millions of copies. But life is cyclical. Everything is cyclical. History repeats itself. There's so much that we can learn, and inside of this book is so much great knowledge. And one of those things is just keeping that open mind.
Hmm.
Don't be intolerant to other
Totally.
views. And there's so much to learn. And he mentioned something in here called the mastermind, getting around certain people and growing.
Hmm.
Like I'm starting to get up on my soapbox now and giving me goosebumps. Like, man, there's so much to share. And to
Hmm.
do that, we have to have an open mind. We have to be able to mastermind with each other, grow with each other. We have to be honest with each other. We have to be good to each other.
Yeah. I think it says a lot about you and you living that out. The fact that like you found me. I told you probably not because
Mhm.
I'm not a real estate guy, and you said it's okay, and I believed you. So
Mhm.
I'm with you. And to be honest, pulling the curtain back about Nate a little bit, I'm a bit jaded, a little bit, because I came from an industry where people were literally looking to steal from their clients.
Yep.
And then when I'm out there and I have that's the first thing I'm looking for, and I see tons. I'm still young enough to be on most of the social media sites. And I see these people on there that are dangerous. I
Mhm.
mean, they are flat out dangerous in what they're recommending and the dream that they're selling. And when I talk to average people, not average income people, but just your average family, your average physician mom, doctor dad, who just wants to be a physician. But they don't want to miss out. I mean, they don't want to like give up generational wealth because they just weren't interested in real estate. When I hear them ask me questions about it, I tend to think, oh man, you've been lied to, or you
Mhm.
have been, you're going down a path that is dangerous or something. But I don't think that's always the case, and I think that's my natural tendency to think that. But I certainly think some people that this is right for them. In fact, we had a client came in, and I think this was actually before we had uh, decided to serve only physicians. So this was a long time ago. And he came in and he had a ton of real estate, like, $10 million worth of real estate. And he's like, well, I feel like I should diversify, which is funny because that's the opposite. Now people with us have all stocks and bonds and they feel like they should diversify into real estate. He's
Real
like, I feel
estate.
like I should diversify into stocks and bonds.
Yeah.
And so, you know, Ben at the time, he said, well, yeah, okay, let's do it. I'm not sure to this though, like you've done pretty well in real estate. And he goes, yeah, I know. And, and he's like, that's something that you can walk up to the house. You can see where your money's at. It's a hard asset. Like maybe you should keep doing that. And he's like, I think we should. So he put his money in stocks and bonds. The market proceeded to take a 25% dip in like the next 2 months.
Oh, wow.
And he came in and he was like, you were right. I should have just kept doing real estate because it's something that he understood. He
Right.
was good at it. He spent, his family was into it and they understood it. I mean, he could get in there and get his hands dirty and he made a great, great living off of real estate. And immediately Ben was like, you should just keep doing that. Like,
Mhm.
we're not selling we're not telling you that what you did to amass all this money is bad.
Mhm.
Just telling you that the people we work with tend to not get it or not want to embrace it as much as I think is required to be really good at it.
Mhm.
And so this is just like anything else in life. Imagine I came to another physician. I was like, hey, I heard there's a lot of money in becoming a doctor. Should I become a doctor? They're like, hope you love it. You're
Mhm.
gonna be spending 90 hours a week there. Hope you love it. You're gonna go $300,000 in debt to get there.
Right.
Yeah, sure, you can make 500 grand a year, but like, it's really hard, and I don't think maybe real estate isn't that hard. Physicians, it's very difficult, but it's similar. It's like you have to like it, you have to be interested in it, and it has to be, you have to be passionate about it. Anytime anybody tries to do anything purely for money doesn't really work out, at least in the grand scheme of things, like in the grand scheme of your life, not just money, but like either you sacrifice your life or you burn out, So have you read Your Money or Your Life?
No, I have not.
Okay. That's your next book, Your Money or Your Life. And I oftentimes think about that book. When people are trying to become rich just to be rich, they essentially sacrifice their life to do it.
Hmm.
And I think that physicians have a great opportunity with their income. If they can just focus on their becoming a physician and focusing on their family, they have a shot at a great life, a life that can have flexibility too. If you choose, you know, if you choose to work at a hospital that allows you to work part-time, some of these physicians can make $300,000 a year working half time.
Hmm.
If you're telling me you can't retire and send your kids to college on $300,000 a year, like you're doing something wrong.
Yeah.
Like you have got to opt out of the American dream and how it's morphed today, which is to become rich. Everyone needs to be rich,
Hmm.
right? So living below your means, you can live below your means at 300,000, you can live below your means at 1 million. It just, it's a perspective shift.
Yeah. And I think, we align a lot in value when it comes to transparency, honesty,
Hmm.
just really getting down to the core of working with somebody, whether that person is a client or not, having that open conversation and just really getting what's best for them. Keeping our own perspectives out of the way. And I'm like on the other end of the spectrum. I love real estate. Like
Yeah.
it may not be for everybody. We agree on that. It may
Yep.
not be for everybody. But let me put me in a room, give me some paper. Let me see how we can make this work for you. But
Yeah.
it ultimately has to align with the why you want this to work for you. Not the money, not the time, because what are you going to do with the money? What are you going to do with the time? And
Right.
all along the way, again, in this book here, Think and Grow Rich by Napoleon Hill, there's a chapter in there where he's talking about the law of economics,
Hmm.
and that will never change. And this in 37, I mean, 1937 was, it was different time, but then again, it wasn't, because at that time he was seeing this law of economics coming to play, where there's people out there trying to get more than what they're giving.
Hmm.
And that's we're in that cycle. We're seeing
Yep.
it. You just talked about it with this blogger kind of thing. There are so many people out there trying to get more than what they are giving. And
Yes.
I'm going to get up on my box one more time here before we go. And I know it's a lot that's causing massive mental, physical issues inside the world of medicine is insurance,
Hmm.
is corporate conglomerates.
Yep.
And you think about those pieces in the law of economics, getting more than the value they're giving, either trying to pinch down on every single way they can to produce more income and less expense.
Hmm.
That is out there. That's what's crushing physicians in my mind, and
Yes.
creating this untold story of um, mental instability, and people leaving. The physicians out there are amazing, and I love to be able to be in a position to help them and their families. Because think about where you and I would be, Nate, without them.
Oh,
And I get asked that question, why physicians? Well, why not?
oh
I
my
mean,
gosh.
you know,
Now you're cooking, Brett, because that is exactly that. I mean, that hits me right in the right spot because when physicians talking about their burnout to me and they're talking about wanting to retire at 49, a part of me dies every time. We need these people.
mm-hmm.
We desperately need them to keep working. It so much so that I have I'm 90% committed. So I'm still young, okay? But so maybe it's because I got a lot of energy.
Mm-hmm.
But I'm 90% committed to the idea of not supporting able-bodied retirement. Like we all should contribute to society,
Mm-hmm.
and physicians contribute so much to society, so much that I have people that will, the corporation takes over, they lose their job, they have a job the next day.
Mm-hmm.
We desperately need them. The whole country does, the whole world does. And they want to talk about sipping Mai Tais on the beach. And to me, that sounds great for a while. But inevitably, every time we have someone that has the means to retire early, they have always gone back to work.
Hmm.
Always. And I don't know why that is, because I know plenty of people that have retired from their job where they don't feel like it's meaningful and they were happily retired. Like this is outside of medicine.
Hmm.
But all the clients that we have that have plenty of cash to retire, they always end up going back to work. And I think it's because, deep within them, they know that they're making a huge difference.
Yeah.
And so it's painful for me because as young physicians come into sort of our net and we start talking to them, they want to retire early. And I feel like it is because they are young that they think like that. And it's because of, all the influencers out there kind of speaking, putting a dream in their head that they don't really have or they didn't have when they first became doctors. And it's hard because I'm watching them struggle through this at their young age and deciding whether or not they want to like save so much money that they can retire really early. And then I'm watching older physicians stay physicians. So they are giving up all their young years with their family so that they can find out in their 50s that they want to keep working. And then what's the money for? Right? So I am a huge believer in doing what's right with your money, saving as much taxes as you can, investing in the right thing for your goals. But I am not a big believer in exactly what you said, trying desperately, floundering around, trying to get more money than the value that you've given this world.
Yes.
So I'm right there with you.
What I would love to see is in this path, connecting with people, providing outside of these resources where we have the passion. My passion's in real estate, yours is in finance, and providing these platforms for physicians because they don't have that ability when their focus is on medicine. Because in order for them to get through their career education, their education career, that's focused in on that. And so much I hear, we're not taught finances, we're not taught business. Imagine this, they're passionate about helping people. Each of us have our own journeys, and along those journeys, we stack experiences. What I would love to see happen is these resources backfill this education system that we have in place and give the physicians and the practitioners the ability to not retire, but roll over. Remember this, we all have our own journey, and we have this stack of experience. It's very unique for physicians is creating these solutions, bringing these value to people like you and me, of their particular path. So creating entrepreneurs, that's what I'm saying about rollover, because then they're not retiring,
right,
rolling over into that world of where they are a business owner. They're enthusiastic. The passion is there. The mental health is there. That's a fun thing to think about, huh?
Right. That is really fun to think about. And I like the way you put that. I just thought of a fun thing we could do.
What's that?
What's your favorite book that's directly real estate? Like what sold you on real estate?
My turning point, well, I think the book that led me into real estate, but I don't think it's real estate, is E-Myth by Roger Gerber, I think it is.
I love E-Myth.
So that was kind of like the leading edge, but the book that was the turning point was Kiyosaki's Rich Dad Poor Dad.
Okay.
I'm so glad it took me so long to get to that point.
Yeah. Okay. So Rich Dad Poor Dad. That's a good one. Hold on. Investor's Manifesto. Whoop.
Yep.
No, you're good. Investor's Manifesto.
Yeah.
So this is written by Bill Bernstein, who's a physician, and he's extraordinarily smart. Like, just this is like the go-to book for physicians in investing. It's a bit heady, so you kind of have to get past those things. But for people who are trying to figure out their path, you should read Rich Dad Poor Dad and read the Investor's Manifesto, and just see what you connect with, because there is plenty of money out there. There's plenty of physicians make plenty of money. There's plenty of more money to be made. Investing is a great thing. You have to invest. But what your path is and what you connect well with, and really what you can stay consistent with, is what's the key. If we have someone that is just hot to trot for real estate, we don't accept them as a client, because they're never going to stick their money in the market for 30 years, which is what it requires to get the results. that they need. And so if one takes you more, takes over your mind more than the other, maybe go that route.
Mhm. Absolutely. That's a great point. So leaving it up to the listener. How about
Yeah.
that? And if the listeners want to connect with you, we talked about this. The website is there, physicianfamily.com. But to connect directly with you, it's Nate, Nate, at physicianfamily.com,
You
right?
got it. That's right.
Awesome. And I love that. I love, just reach out to Nate, have a conversation, and that's it. It's all about the connection. I
Hmm.
love my background in my first company that I started was a design build company, and it was Connect Design Build. I had left a closely held family business where it felt like we had to just acquire more clients and more
Hmm.
renovations in order to feed this machine. And this idea of connecting with the client was huge. But then I have Connect Home Buyers, which is our real estate acquisition company. But if you can get the rhythm here, it's all about making the connection. And I say
Yeah.
that because physician family, it's in the name.
Hmm.
If that touches base with you, reach out to Nate, send him an email. I've had, a couple of great conversations with Nate, and I think it's all about the connection, man.
Yeah, certainly. And if you're too nervous to send an email, I know some people don't want to reach out. We have a podcast, Physician Family Financial Advisors Podcast, which is a mouthful, but physicianfamily.com. You can go to the podcast there and just listen to what we're about.
Awesome. Yeah, and that it is up on the header, very, very top of the header. It
Cool.
says podcast. So
Yeah.
check that out. And Nate, man, thank you for your time.
Yeah, you got it. Thanks, Brett.
Awesome
We'll talk again
conversation.
soon.
Yeah, awesome. And to the listeners out there today, it was a long episode here today. But if you're hanging out with us still today, we touched on some topics here, and I love being able to give. And I hope that you found value in what we're giving here today. And there's nothing behind it. We're not selling you anything. We're just trying to connect you with your dots on your journey because you do have that unique set of experiences. Don't hesitate. Reach out to Nate. You can reach out to us too, info@physicianwealthsystems.com. And as always, thank you not only for your time, but the attention that you've given us today, because your time without attention is nothing. So we appreciate it. We'll talk to you on the next show. The Real Estate Mogul, MD.